Good evening. This is Ken Long from Tortoise Capital Management on December 27th, 2012. I'm going to take a look at a series of regression line crossover trades. This screenshot here is looking at the freestockcharts.com version. Experiment with that as a charting package. I'm pretty happy with it. All right, so what we have here is the river is the 30-period Bollinger Band, plus or minus 1. That's the inner shaded area. I've added a second Bollinger Band, the plus or minus 2. I'm thinking of that as the floodplain. The thick red is the 30-period moving average, or the center of the Bollinger Bands. The orange ribbon is a 2-period Bollinger Band, a smoothed price. The white line is a 30-period regression line. The pale blue is a 10-period regression line. It changed the color formatting on that so it would show up on the black background. What I've done is highlighted some areas, some key areas for this strategy. This case, first yellow line is where the price and the regression lines leave the river at about 25.10-ish. And they make a run outside of the river into this consolidation pattern here, and then the regression line crossover occurs here. When that happens after a run outside the river, we expect price to come back to the mean, a reversion to the mean. In this case, it did that by just going sideways in a very tight range between about 26.80 and 27.10, and so it waited for the Bollinger Band mean to catch it. Other times you'll see it pull back to the Bollinger Band. In this case, the fact that it didn't fail, that just went sideways, was another reason to be very interested in when we see this sideways quiet channel occur here, defined as Bollinger Band mean is about flat, narrow range of volatility here, so that's the quiet, and then the channel, meaning that the price, the ribbon, and both regression lines are inside the river, and then we get interested on it leaving the river. In that case, it does it at about 27.10. That's when the ribbon leaves the river and makes a nice run outside of the river again, up to 28 1/4, and then comes back to a regression line crossover after this consolidation period at about 27.85-ish, and then price stays in the river. There was a tradable moment inside here, but really, what I really want to highlight are the how fast this rascal will move, and then what the end of that move looks like when it's over. And that is, in both of these cases, you will see an expansion bar that doesn't hold, and then the ribbon doesn't catch up to it, so you get this little exhaustion spike followed by a weakening second bar on 3-minute charts. That happens in about 5 minutes. Failure to follow through any further, to me, is reason to get out here. You have to be out not later than the regression line crossover. In this case, it wouldn't hurt you. In this case, you would have given back 20 or 40 cents, depending on where you get out of that. But I want you to just recognize that's what I'm thinking of as an exhaustion bar, and that is a spike up on a large range, and it can't hold, can't make a new high, and then you start seeing red candle after that. That's usually, for me, that's enough reason to get out inside there, and then start stalking it once more. So what we have is a run up here in about a 30-minute, or really a 20-minute move. It went from 25.10 to as high as 27.10. So that's $2 on a $25 ETF. That's an 8% move in 20 minutes. So you don't have to get all of that, but you want to get some of that. And when you see the exhaustion bar, there's no reason to stick around. I mean, how much more did you think it was going to go? It was well outside even the floodplain here. It was outside the Bollinger Band. And then nothing until the second one, and now it goes from 27.10, let's say, to about 28.25. So that's $1 on 28, which is about 3.5%. Again, in about 20 minutes, and then a failure back. So that's sort of the characteristics of this regression line crossover. In this case, the symbol UVXY, the double VIX ETF. All right, so let's take a look at the trades that were actually taken in the chat room. So this is using the stock charts markup, and so the blue line is when it opened. It opened basically where it closed yesterday, sold off back to the Bollinger Band mean, a little double bottom with a higher lows. Bollinger Band mean still facing up, the river flowing up. The VWAP comes down, starts rolling back up, and now we got this ribbon leaving the river here, and the 30-period regression line never even got back in the river. And so the entry on this one is at 25.05 with a 30-cent stop here at 24.75, which is below the ribbon, the double bottom of the ribbon. So relatively low risk. And I like the fact it's got a higher low compared to yesterday's little surge. So I'm thinking it's going to at least get up into this area. What happens is it takes off, it runs right up to 25.52. So at 25.52 or 25.55, we got almost 2R and it's really running. So we go ahead and put the second position on here. When it takes out, it's above yesterday's little closing high here. The 10 period is crossed over. It's running away, so I feel like that's kind of a low risk entry here. So we get the second entry at 25.55. Right about in here. Again, 30-cent initial stop for position sizing, adjusting the stop all the way up. And then in the next 3 minutes, it just runs away up to 26.10. And so I quickly stake in my stop here on the two positions at 26. And so if I get out at 26, then that's going to be something like 4 or 5R, probably 5R. So I tap that one in, that little like a mountain climber. In fact, it goes past 26.10 and shortly thereafter runs up to 27. And so the actual trade pattern on this one is as follows. End up getting two more positions into it at 26. So another 50 cent move, another 2R. And then at 26.25 in this last run up. Now at 26.45, I got nervous on this one. I cashed 3 of the positions at 26.45 and locked in 9Rs. So I still had one in hand. It went from 26.45 and then within that 3-minute bar went as high as 27.10, came back and then started failing. So I get out at the final position at 26.90. I wanted to leave one in just in case something like that happened and I wouldn't feel regret. I was more concerned about locking in a really nice move, almost a double-digit move there. And so on that last trade, get from 26.25 and then being able to exit 26.90, locked in a couple more R. So that whole little trade sequence there in about a 25-minute span is 11R. Left quite a bit on the table here. If I at least another 3R by cashing those 3 there, but I'm not worried about that. In terms of risk management and money management, it can come down as fast as it goes up, and so I'm pretty happy about locking in those 9R. Shortly thereafter, it goes into that sideways congestion pattern that we saw on the free stock charts one, and it went sideways, 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 never really failed below the Bollinger Band mean or the VWAP. The regression lines are riding the top side of the river. On this one, I only show one set of river here, plus or minus 1. So I take the a re-entry here at 26.85. If you recall, the previous exit was at 26.45 and then 26.90. So basically, I'm out of the market while this is sideways chop is going on. But I like the fact that there's no volatility, no shenanigans in here. And then it takes off again at 26.85. You get one position in. At 27.45, or about 2R in hand on the first position. I put a second one in. It makes a quick run up to 28.23. And again, you see that large spike up on a green candle, but it can't hold that. The ribbon doesn't follow it any further. It starts going sideways, and so right into the second, the first candle after that, or the second candle after the peak, it's turning red, and so I just go ahead and exit at 28. It chopped around and then pulled back to the Bollinger Band mean from here, and then right around in here you get that regression line crossover once more. It would be way over here to the right. But as it starts going into this sideways chop, there's really no advantage for me anymore. It hasn't failed, but failure to follow through. I would be interested in this above 28.25, but I'm content to, on those two positions, to knock in another 6R out of that one. So that's the regression line crossover and the sideways quiet channel combination here with from the 27th of December. So all told, that was somewhere around 17R when the smoke cleared, without trying to optimize the to the last dollar. But pretty happy with the trade management on that one. So I wanted to show was the sideways quiet channel, seeing where the regressions line are with respect to the river, the narrowing of the channel, the leaving the river is a sideways quiet channel, how quickly that run up can occur, and you can't wait for it to happen to get in. You have to be catching it as it leaves, and you can be using tight stops because failure here below the river or below the Bollinger Band mean would tell you to get out. So thanks for your attention and good trading.